Hello and welcome to another financial analysis video. In today's video I'm talking about Chesapeake Energy. Chesapeake Energy earlier this week disclosed that it is going to lay off 15% of its total workforce, approximately 750 employees, as the energy market continues to sort of erode around them. And Chesapeake is a company that I've actually been keeping my eye on for the last couple of months, and I've made some decisions here, and I want to talk about those. And I want to also look at some of the operating metrics of the organization. First, let's have a look at the dividend, which the company eliminated a couple of months ago. This was actually the event that got my attention when the company eliminated the 9-cent dividend, which was around 3% in terms of yield prior to its elimination. It got my attention for two reasons. One, when it shocked Wall Street so much when they did this that bondholders began to sell bonds of Chesapeake Energy heavily. And at one point, bonds that were due in 2021 were selling at 86 cents on the dollar. And so that's where I entered, and I'm currently at with Chesapeake Energy. I'm not a shareholder. I am a bondholder. I purchased corporate bonds that are due in 2021 with a yield to maturity of a little over 9.5%. When the market went through its steep correction then, in August, the bonds actually dipped all the way down to 70 cents. So I doubled down and picked up some more. The bonds eventually rallied to 80 cents, and now, prior to today's announcement, have settled back around 70. I'm not at this time planning additional transactions, but I'm going to go through some additional statistics because my plan right now is to hold these bonds to maturity, and I do believe this company will survive this. And one of the places I want to start is with the return on equity. The return on equity continues to fall for Chesapeake Energy, but it is still fairly positive. And in fact, it is still above some of the lows of 2012. Now, this is going to dip additionally, and at some point, it may go negative with the company really idling some of its assets by doing this, but it's not right now in a situation where things are, how should I put it, direly bad. Now, here I want to focus on cash flow, and obviously operating cash flow has eroded, but with it, the company has cut back significantly on capital expenditures. And this is what you want to see, because what it does is it preserves free cash flow. And free cash flow for the company is still at $2.5 billion. In addition to that, and we're going to see this in the third quarter, they've saved maybe between $60–70 million in a dividend payment. So the dividend payment is insignificant, really, to the company's operating success, but it's another proactive move in order to maintain free cash flow. Now, Chesapeake's downside here is that it does carry a decent debt burden. It's got a significant amount of liabilities at $1.25 billion. Now the company is running around $18 billion in liabilities. So its capital position has improved. Well, I should say that the liabilities balance has improved, but the company is beginning to lever up, mainly because of the fact that it is earning less and paying down debt at the same time. Now, let's see what other statistic I wanted to show here. When it comes to the stock, and the earnings are all out of whack, so we won't pay attention to that chart there. The stock is actually trading at only 43% book value. So the street is looking at a decent likelihood of failure here in terms of where it's pricing it. Now, I'm not going to blame somebody for going out and buying Chesapeake Energy stock. I own shares of another energy company right now, and I'm going through the emotional up and down roller coaster of that. I really wanted to take risk here, but I wanted to do it with a little bit more stability. And so that's why I pulled over to the bonds. I do not know. I do not have a forecast on where this stock is headed. It could, without a dividend and without a dividend yield, it could go down to $3. It could go up to $12. It really depends on where the energy markets are and what types of returns Chesapeake gets on those assets. Hopefully, they will not sell any assets at a steep loss. That would really send the panic signal here. So that's something else to look out for down the road. I hope you have a great day and happy investing.